Welcome to this explainer. Today we're diving into one of the most heartbreaking corporate failures in modern history, the tragedy of the Boeing 737 MAX. We're going to look way beyond the aerodynamics and the lines of code. Instead, we're focusing on the organizational story. It's a look at exactly what happens when immense operational pressure, fierce competition, and a relentless demand for efficiency slam headfirst into the uncompromising demands of human safety.
For the longest time, Boeing was basically untouchable. They were the absolute gold standard of aviation. But the 737 MAX crisis forced everyone to ask a really uncomfortable question. Did an intense pressure for profitability and production speed quietly erode the very systems designed to protect human lives? Today, we're exploring how that incredibly delicate balance between engineering caution and business pressure was tested, and ultimately, how it snapped.
Act 1. An empire built on engineering.
To truly grasp the weight of this tragedy, we've got to understand what was lost. For decades, Boeing wasn't just another manufacturer. They were the ultimate symbol of trust. Building planes is incredibly complex, but Boeing historically met that scrutiny with a culture deeply rooted in long-term reliability and an absolute focus on safety. There was actually a famous saying in the industry, "If it ain't Boeing, I ain't going." That's how much people trusted them. Technical expertise wasn't just important, it was everything. Passengers didn't need to understand aerodynamics, right? They just trusted the name on the side of the plane because the engineers were running the show and safety was literally their religion.
Act 2. The threat from Airbus. But, as you might guess, that golden age eventually faced an existential threat. The global aviation market is fiercely competitive, and at the end of the day, airlines care about fuel efficiency above almost everything else. So, when Boeing's main European rival, Airbus, rolled out a highly fuel-efficient plane called the A320neo, Boeing was put under immense pressure. They were staring down a massive strategic crossroads. Delaying meant losing billions in market share. So, they had two choices. Option 1. Spend the massive amount of time and money, often taking a decade and tens of billions of dollars, to design a brand new aircraft from scratch. Or, Option 2. Quickly modify their existing, decades-old 737 airframe.
Driven by the sheer panic of losing market share, they chose the faster, cheaper path. And look, from a short-term business perspective, the logic totally makes sense. Modifying the 737 keeps development costs down, and it means airlines wouldn't have to foot the bill for costly pilot retraining. But here's the catch. This choice unknowingly pushed an older airframe way past its physical limits. To fit these new, larger, fuel-efficient engines onto the low-to-the-ground 737 body, they actually had to alter the plane's center of gravity. That totally changes its aerodynamics. So to correct the way the plane handled and make it feel like the old 737, they secretly installed a piece of software called MCAS. This software would automatically push the nose down. And that single decision set the stage for a catastrophic crisis.
Act 3. The dangerous efficiency trade-off.
This high-stakes decision sparked a massive shift in the company's DNA. Large corporations are always demanding higher shareholder returns, faster production, and strict cost control. But pushing those levers in aerospace creates a uniquely dangerous tension. In the tech world, move fast and break things is a celebrated motto, right? Well, in aerospace, a broken thing means broken lives. When you apply excessive efficiency pressure from the top down, it inherently silences the organizational caution and engineering pushback that is absolutely essential to keeping planes safely in the sky.
Let's put a name to this invisible force. We call it trade-off thinking. Now, this is a strategy that works incredibly well in your average business. You lower costs, you lean out operations, you boost productivity. Boom, success. But when trade-off thinking replaces engineering independence with sheer financial drive in a high-risk industry, it becomes literal. Excessive optimization literally strips away the redundancies, the oversight, and the critical safety margins that are supposed to catch us when things go wrong. Suddenly, the balance of power shifts from the engineers designing the plane to the executives managing the balance sheet. And the truly terrifying thing about this kind of cultural rot is that it's practically invisible until a failure actually happens. Before the crashes, Boeing's efficiency improvements looked like a massive win to Wall Street. Costs were down, production was at an absolute all-time high, and financial performance was stellar. It was the perfect illusion of success. But underneath that shiny, profitable surface, fatal vulnerabilities were quietly embedding themselves deep into the company's structure. Employees felt this immense pressure to hit production targets, which made it incredibly hard to speak up about safety concerns or ask questions about that strange new software they were installing.
Act 4. The true cost of failure.
Eventually, of course, that illusion shattered. The invisible accumulation of risk became a horrifying reality in late 2018 and early 2019. First, Lion Air Flight 610, and shortly after, Ethiopian Airlines Flight 302 plunged from the sky. Pilots were wrestling with automated systems they didn't fully understand, and tragically, 346 people lost their lives. Look, this wasn't just a minor software glitch. It was a catastrophic manifestation of all those earlier compromises. It immediately triggered global investigations and an unprecedented worldwide grounding of the entire 737 MAX fleet. It proved, in the most heartbreaking way imaginable, that trading safety margins for competitive speed simply does not work.
The immediate financial fallout? Absolutely staggering. We are talking about tens of billions of dollars in direct losses, compensation, and halted sales. Production disruptions completely paralyzed Boeing's operations worldwide. And there's a really bitter irony here. This massive financial hemorrhage was directly tied to the exact strategic decisions that were intended to save money and boost profits in the first place.
But beyond the massive financial hit, the true cost was the total evaporation of trust. And those effects cascaded through the entire aviation ecosystem. The brand's legendary reputation was severely damaged, vital relationships with federal regulators were fractured, airline customers lost confidence, and internal employee morale completely tanked. This highlights one of the most crucial lessons in operations strategy. Short-term efficiency gains create monumental, long-lasting losses when risk management fails. Sometimes efficiency doesn't actually create value, it just increases fragility.
Act 5. The ultimate strategic lesson.
So what do we actually take away from this? We have to recognize that the Boeing crisis was never just a technical issue. It was a systemic failure of leadership, behavior, decision-making culture, and organizational incentives. Catastrophes of this scale rarely happen because of one single error. They're the result of accumulated decisions, unchallenged assumptions, and a gradual, dangerous cultural drift away from safety-first thinking. Culture dictates how risks are interpreted, right? If a company values speed over caution, the behavior of the entire organization is going to shift to match that.
These failures build into totally non-negotiable lessons for anyone studying corporate strategy or operations. First, you have to recognize that competitive pressure will always tempt you toward risky trade-offs. Always. Second, you can value efficiency, but you must understand that excessive optimization kills your resilience. Third, in high-stakes industries, you must actively protect engineering independence. The experts need the power to pull the emergency brake and just say, stop. And fourth, true leadership goes way beyond financial performance. It's about protecting the integrity of the systems that human beings actually depend on. Ultimately, efficiency can never be the sole measure of success. When you're dealing with life-critical systems, safety isn't just some box you tick for the regulators. It's not just a compliance issue. It is the absolute, concrete foundation of your entire business model. Without it, your company literally has no right to function.
I want to leave you with a final, pretty provocative thought here. Rebuilding trust takes years, maybe even decades. So when a legendary empire sacrifices its core values and when lives are tragically lost because of it, is it even possible to fully restore the trust it broke? It's a question Boeing is still struggling to answer today, and it serves as a profound warning for every single organization out there trying to navigate the dangerous line between efficiency and safety. Thanks for tuning in.